Hello traders and welcome to our market update. It's Stu Napan here, founder of Master the Markets Elite Traders Conference and the Traders Open Day. So here we are today on the 1st of May 2020. It's the beginning of a new month, traders. 5 months have already gone into the new year. So how's it going for all of you on your trading P&L and amidst all this global pandemic on COVID-19? Right, as I always say, there are always great opportunities with everything that's going around you. It's just where we put our focus on. Right now, today, we have really good run over here on our side in terms of the markets over here. We are running about 9, 10 positions over here, which I'll be going through just in a little bit. But as our format always goes, I will first explain in terms of a topic, and then we'll go on to our trading performance for the week. Right, so the topic for today is going to be on three types of exit. Okay, three types of exit. Now, exit is very important for traders because why? Because here is where you realize your profits. Here is where you realize your profits. Until then, it's unrealized. You can't use it for anything. You can't use it for buying anything. You can't use it for going on your holidays. You just basically can't until you realize it and it comes into your bank account. So exits are very important and is one of the stuff which is quite tough to master. Right. So the three types of exit. The first type of exit that most traders are used to is called the technical exit. Okay, the technical exit. Now, the technical exit, as you know, there's so much of data out there, of information out there on technical exits. Basically, the most common ones are get out on support and resistance. Unfortunately, most people do not know how to quantify even support and resistance levels. It's just subjective. When it's subjective, you cannot scale and reproduce. It's not quantitative. You don't have a reproducible, scalable, sustainable strategy that you can validate your stats on. The other type of technical exits can be on swings. Now, this is very important. You must quantify this as well. We've reiterated this on many videos. Other kinds of technical exits can be also be Fibonacci levels. Some people I know that can exit on Fibonacci levels too. So there's so many in here. Indicators as well. You can do that. So that's one type of exit. The second type of exit is called the time exit. Time exit. Now, time exit is basically saying that, okay, I'm going to exit it within 3 days. Okay, I'm going to exit it within 3 days or 5 days if it doesn't take off. All right, so that's pretty simple on time. And then finally, you got the third one, which is the money exit. So the money exit, it's like, for example, like over here, we are having this example where we are just about 2,400 pounds up, just nearly 2,320 over here. And you can say that, when it gets to 2,000 pounds or when it gets to 1,500 pounds. So, for example, if I take a look at a dollar Swiss position over here, now the dollar Swiss position over here is 237 pounds up. We just put it yesterday, right? Now, once it's like 1%, 1% or 0.5% of your account up, what you would say is that then I would just move my stop to break even. That's on stop, so that can be money stop too. But however, money exits, you can say that once it reaches 2%, then I am going to exit the trade. Okay, so that could be a money exit as well. Okay, so that's one way you can do it. That's an example of a money exit. Now, some of you may be asking, and the favorite question is, okay, Tiru, tell us, like in all your research that you have done, since you guys, every strategy that you do is research backed, which exit is the best? Uh, the thing is, one of the exits I've heard is the best is actually time exit. However, my opinion on that is that I wouldn't say one exit is better or the best than the rest. My answer, in my experience, is that it's the combination of all three. The combination of all three. Now, how do you do such an exit? For example, one thing that we do, we look at our open equity data, which I've talked a lot about in our previous videos. We will say something like, I would look at a distance of 3 ATR. I put an exit based on distance and time. If it gets to, let's say, in the currency world, 300 pips within 8 days, then I will classify that as a good runner. If it doesn't get there within 8 days, 300 pips, doesn't cover that distance within that time, I would say it's a poor runner and I'll cut off that trade. Okay, so that is one way that you can combine both of them, right? And also another thing what you can do is that in terms of scaling out, you can have different exits based on each one of this type of exits. So we use a combination for one of the exits. So for example, in cash in strategy, which you're seeing over here, which is just under about £2,400 at the moment. In this particular strategy, what we do is that the first exit, we exit it the next day itself, right? So there's a bit of time and there's a bit of technicality that's there as well. And as long as it closes in our favor, right? So closes in our favor plus next day if it's next day, right? The second type of exit that we do is based on a combination of distance and time. So we are using time and technical exit as well, right? So we're using time plus technical. And the last exit, traders, what we do is the price action exit. So basically what we're doing for is looking for a turning point in the market out of market exhaustion. That's purely technical, the last one. Okay. The second one, actually, when I say time and technical, we use a combination of money exit too, because we use a reward risk ratio of 3:1 as well. Okay, so we do that as well. So we use a combination of 3:1 money exit, arbitrary, together with time and technical. So if it doesn't cover this time and distance, then I will exit out live. So we used a combination for number 2, and number 1 and number 3 we used technical, and for number 1 we used technical and time. All right, so that's what you can do, but that is after extensive research. The foundations of all of this comes from the Traders Basecamp package. That's why I always tell every advanced trader, every beginner trader, you have to do Traders Basecamp package to understand all these mechanics very well before you start to trade. The unfortunate thing is that most traders do not know where they begin with, and they start to go all haphazard. They don't know what the strategy is meant to be, what the foundations are, and that's why the results are just not getting consistent for them. The number one main thing for us when we get from clients the challenges they're facing is that their trading is not consistent. Okay. Okay, good. I think that's that on the topic. To just summarize, 3 types of exit. First one, tech, nickel. Second one, time. Third one, money exit. Okay. All right, great. And the combination of that is what gives you the ultimate edge in your consistent profits that you achieve. Okay, great. So that's to do on that. Let's go on to the markets traders. So this current strategy, what we are really rolling out on and our clients are really getting amazing profits on is the cash in 4.0, which you can just see over here, which is just under £2,400. Right, so that is a very simple strategy. It's based on our algos. It's based on the identifying of the tops and bottoms over here. So once we get the confirmation, we take in a trade and we exit on the 3 types of exits, what I just mentioned. So on dollar Swiss, we're taking it on a downward side. The point what we're looking out for is this low point over here. Okay, that's what we are looking at. Next, dollar yen. What we are looking at is also a down trend over here, more to the downside as well. Okay, is what we are having. Cable, still we are looking at it on a long side over here, looking to take out this high. Not sure if it will, but the good thing is that we exited our first position here, as I mentioned, on time and technical exit. And the second and third, we've already broken even on it and riding on market profit. So whatever it does at the moment, we're not really bothered about that. Euro dollar, at the moment we are long on it as well. You can see it's a downtrend, but however, we saw a confirmation of a bottom buying pressure coming back in. First exit over here. Now it's moving towards the top over here, looking to take out this high. So let's see if it does that. Next, Aussie dollar. Aussie dollar, we see there's a turning point here, uptrend still at the moment. We're getting a good reversal signal over here, so we might analyze this. Our traders might be looking at that later on for the Sunday trades. Euro yen, still downward trend, big primary bar yesterday. Since we do not trade it, we did not take this on a money bar strategy 3.0. But it's a good reversal signal, high probability for this low to be confirmed. Okay, so look out for that. Bitcoin, we did take this particular trade. We took it on the confirmation dot again. Made some really good profits on that. Second position hit target. Third position came out on stop over here. Got really good amount of profits too. First exit, time and technical. So they're really good exits, by the way, traders. I mean, you have to look into it, research it. Of course, if you want to save time, hang around the professionals, get there much faster. FTSE, uptrend at the moment, seeing a little bit of reversal signal to maybe confirm the top. Dow, it's not really going anywhere. It is hovering around this high over here. I would say that highly probably that could become a turning point. It's starting to show some weakness over there. However, it's the first interruption. In terms of our research studies, still high probability to take out that high. Okay, right. Gold. Gold at the moment, it's a bit choppy. Still, I would say higher probability to the downside for a little while before it starts to pick up strength. If I look at the weekly on this on gold, it's still on the up. So I would say maybe you might get some little bit of noise onto the downside before it goes up a little bit more further. Wheat, still carrying on with its downward trend. A little bit of showing of sign of buying pressure coming back in. So there is a probability that it could turn over here to confirm the bottom. Soya beans. Soya beans, yesterday we had a signal. We did take this on the move up. Open equity still towards the upside probability. So let's see if this turns around or not. First interruption, high probability that it will turn around. Brent oil, our traders are all on it as well. Getting in on this confirmation bar, first exit here. Still a little bit of move to the upside, I would say, before open equity diminishes and it carries on with its downward trend. Next, cocoa. Cocoa, we have a market compression. High probability will take out this high. Stops will probably be highly be there. So let's see towards that. Kiwi, the final thing. Traders were on that as well. Took a bit of profit. Got on the stop. Is there still a bit of upside to that? I would say so. It's the first interruption, probability, highly probably towards the upside. If it does confirm, it's rare, it's an island reversal as we call it. It's straight away, it's reversing. And at that point, we will look at probably taking shorts as well. Right, I guess that's the market update for you over there. And yes, and for Cash In 4.0, it's really a great strategy. What we are rolling out at the moment, all that came from our R&D part just about 6 weeks ago, still finishing up the last 10% of the research before we fully roll out onto further instruments on our Elite Traders program too. Right, so now going on to how did we perform for this week in terms of the Elite room. How did we do? Swing profits, we had a trade on swing profits on the 27th to 29th of April. We did take a bit of a loss on that one. It didn't turn for us. So 0.92% loss on that one. Prime profits is the first interruption study, and the strategies that we are doing as well. We took a -1 on that. It's not really performing that really well for this year. So we will have to monitor the drawdowns. But however, even though the strategy made a little bit small loss last year, but it still didn't go past the drawdown. So we keep monitoring the drawdowns. Do remember also one thing, traders, is that for you to keep on consistently trading and with conviction as well, you must know your drawdowns very well of your strategies, because some strategies, as far as even institutional quant traders will tell you, and these are the guys that we hang around with, they will tell you that some strategies, they stop maybe not working for 1-2 years, but as long as they don't hit your drawdown, you keep trading them, because you never know, on the third year they will just turn around and make you 50-60% profits. That's what we've seen in our research as well, and that's why we continuously trade them, because of the conviction that we have and the edge that we have, and of the recurring principles in the market that will continue to happen. That's why we keep going on them. Right. So overall on Elite Room minus 1.92%. I won't report the cash in 4.0 here because the full report is on the live trading room journal 2. So over here on Liftoff 3.0, we did take a trade as well, traders, for this week. Liftoff 3.0, we took about 0.73% profit on Euro Yen. And then finally, we had the cash in 4.0 system. For this week, what did we do? So for this week, as I said, it starts from here, from 30th April onwards for this week. So from here, if you add it all up, then it's about 1.40 is what we have, and then we got the S&P over here too. So if you add all of that up together for this week, it's 1.40%. So if you were to add all of that up together, so what do we have? So 1.40 plus 0.73, which is the live trading room, that's about 2.13%. Elite room, minus 1, and minus 0.92, that's about minus 1.92%. So overall, when you add it all up together, 0.21% up is what we are at for this week. Okay, so good week. I mean, in terms of even the cash in as well, so it's all going well. So now it's just a matter of money managing and getting it upwards and beyond. Okay, right, great. I guess that's pretty much that from this video over here. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.